John Templeton, the newspaper Variety recalled its famous 1929 headline this week. They said, "Wall Street lays an egg, the sequel." You were around in 1929, although you weren't as active as you are today. What's the comparison?
The panic this time was much greater, much larger. But at that time, the stock market would have recovered within a year, except that the panic spread into general business conditions. And that I do not expect this time. Things are so different. At that time, there was no unemployment insurance. There was no guarantee of bank deposits. There was no insurance on brokers' accounts. There was no Social Security, and many other factors. So that this time, I think this is simply a stock market, a bear market in the stock market, and will be reflected in little, if any, decline in general business.
President Reagan last night seemed to be at pains not to say we would not have a recession. He said if we lost confidence, if Wall Street's mood spread to the country, that we could have a recession earlier than we might. Does that worry you?
No, that is about the same thing as was said in 1929. But it's also said with every other bear market which has not increased in spread. It was said in the bear market of 1937 and 1942 and 1974. And usually it's true that nothing will happen this time except a temporary decline. I would go as far, Lewis, to say that I would be very surprised if there is any decrease at all in the amount of dividends paid out. I'd be very surprised if there was any decrease in the book values of corporations. I'd also be surprised if there was even a decrease in the sales volume of corporations.
You have always taught that the successful investor looks for bargains. You must have some bigger bargains than a few days ago, do you not?
Yes, indeed, Lewis. You might say that we're being offered a great opportunity. Those who weren't quick enough to get in on the ground floor when the bull market started in 1982 are now being offered a chance to get in on the ground floor of the next bull market.
Your own industry, the mutual fund industry, has had a rocky week, massive redemptions, people told they couldn't redeem for 7 days in many cases. Do you find in your own operation that people are panicking and trying to get out?
Our redemptions this week have been less than 0.1% if switching from common stock funds into others. Overall, with all the funds together, there's been a net increase, not a redemption.
What's your advice to people in terms of the stock market now?
Patience, be a long-term investor, be prepared financially and psychologically to live through a series of bull markets and bear markets, because in the long run, common stocks will pay off enormously. The next bull market will carry prices far higher than this one.
Why?
Because the whole nation is growing more rapidly. Gross national product of the nation will double in at least the next 10 years. We think the gross national product of the nation 40 years from now will be 64 times as high as it is now. And that will be reflected in sales volume and profits and share prices. So that from a long-term investment standpoint, it's a question of when should you put your money into stocks. We can't give you the exact day, but sometime the bull market will start again and you want to be in on it.